What's up, guys? Welcome to episode 2 of the Bootcamp. I'm going to be going over market structure today. How to identify failure swings, how to identify what structure we're in, how to trade with that structure, and when to kind of avoid trading due to bad structure and bad price action. So let's get into it. Everybody knows how an uptrend looks, okay? Right? We're making higher highs, higher lows, continuing to make higher highs, right? It's an uptrend. Everybody knows what an uptrend looks like. But when we start to reverse from that, move into bearish structure, we're going to have a failure swing to initiate that, right? So what is a failure swing? Failure swing is when we move down in an uptrend and then we come up and it looks like we're going to break this high and make a new high, but we actually don't. We fail to make a new high and we start to reverse and move lower. So that is a failure swing, okay? And it's just simply when we fail to sweep out the previous high and continue the trend, okay? But having a failure swing is not a full sign of break of structure, because we very easily could just fail to make a new high for a little bit. We come down, tap into bullish gap, and then move higher, okay? So just having a failure swing is not enough for us to get a break of structure. We have to have two things of confirmation for a break of structure. And so if we're in an uptrend, we have to have that failure swing, and then we have to push past a previous low, okay? So either pushing past this low here and then coming up, retesting it and moving lower, or just pushing all the way past this low and just wrecking through, and that really is the fullest sign of a break of structure. So failure swings are very, very, very important, and you have to be able to recognize them, because if you're in a short or if you're in a position and we kind of get that failure swing and we fail to make that new high, if you're in longs, you may want to think about closing your position early or going break even, right? So let's go over an example of a failure swing, actually from Friday or Thursday, when we took a short and we didn't actually end up sweeping out the liquidity. So here is that. On the 15-minute, this was when Trump ended up having a speech Wednesday night, and the markets just dumped, right? So we're very clearly in bearish structure. I shouldn't have to teach you guys what an uptrend looks like, what a downtrend looks like, but here's the downtrend. Making the lows, failing to push past these highs, and just continuing lower, right? We're not making any new highs. We're not really failing to make new lows. We're just really consistently moving, making new lows. So on the 1 minute, on Thursday, here's a perfect example of a failure swing and how you can kind of use IFEGs as an early indicator that we are going to break that structure. So here we go. Again, this is all from Trump's speech. We're just moving lower and lower and lower and lower and lower, right? Started up here around 9 o'clock. We just literally dumped. And so we're clearly in bearish structure. So on Thursday, I'm only going to trade with that current structure just because reversals work, but I like trading continuations, help my win rate be a lot higher. So I only trade with the current market structure until we have confirmation that we're flipping it, like we did here. So we ended up getting short here. We tapped in a 50-minute bearish gap, got in short. Our take profit was down here at this liquidity, right? But we got a failure swing. So I ended up, we didn't know we had a failure swing at the time, but I always trail my stop loss, trail my stop and profit once we're close, because this can happen and happens all the time, and you're going to end up making more money, right? Because we would have got break even here. So yeah, we come up, we technically have a failure swing here. We don't push lower, we actually come up higher. But again, that's not what the break of structure is. We don't just get a failure swing. We have to push past this high in order to get that break of structure. So we come up, come down, get our entry over here, get stopped in profit here, and then we fail to sweep out this liquidity and just rip up in the opposite direction, right? So we get a 1 minute inversion here to the upside. That's not a break of structure. We don't have that confirmation, but getting this inversion right here, really, really good. I called this trade out on Thursday. I don't know why I keep saying Friday. Called this trade out on Thursday because we get this failure swing and we got really good volume to the upside and we got a 5-minute inversion. Got an inversion here on the 5-minute, which is really, really good. And again, this isn't a sign of a break of structure. Just getting an inversion in that direction off of that failure swing, but it can get you some really, really good entries. Okay, especially when it's a V shape like this, and we get that immediate volume in the opposite direction. So this long was really, really good. But again, we don't have that full confirmation of a break of structure until we've pushed past that previous swing. Okay, all right. So that is an example of a failure swing and kind of how to see it happening earlier, or see the break of structure start to happen earlier with those inversions. Okay, so now let me go into an example of what not to do. Okay, so if we look over here on the 15-minute, we have this high up here. All right, this high over here, clearly in bullish structure, coming down, respecting this 15-minute and moving higher. But we get this failure swing right over here. We fail to push up and get this new high. Okay, so fail to get that high. You cannot be married to your buys. Okay, because again, we're not always going to just sweep out liquidity every time we see it. We're going to have these failure swings and we're going to have market structure shifts. Okay, so another way, again, seeing these inversions will help you notice when we are starting to shift. Because technically, right here, we get this 15-minute inversion. We haven't technically broken structure yet, but after that inversion, we start to trend lower and lower. Even though structure is not fully broken, that inversion is really indicating that we are going to get that break of structure. You cannot be married to your buys. That's what I'm trying to say here with this. You cannot be married to your buys. So even though we're in this bullish structure, we have this drawn liquidity higher, once we get a failure swing, the probability of your trade to that liquidity playing out is going to be a lot lower. Okay, so although it is a continuation, because we're technically in this bullish structure with this high, you think, oh, if we get an inversion to the upside, we're going to take it. Not necessarily. We want confirmation by making a new high or pushing past a previous lower high, that we are actually going to keep going higher. Because get this failure swing, move down, we end up inversing this 15-minute gap, and once we inverse that 15-minute gap, or on the 5-minute, 1 minute, whatever, I would no longer be interested in taking these longs to this because of this failure swing. Okay, because that failure swing is indicating that we don't have as much volume and as many buyers stepping in. We want as much confirmation that our trade is going to play out, and getting a failure swing immediately is going to drop it by like 20% for me. So identifying failure swings and changing states of delivery are going to be the most important thing you can do. Okay, so CISDs are kind of like mini breaks of structure. That's kind of how I look at them. That's not really what they are, but a CISD is just when we have a candle in the opposite direction close above a candle with the current structure. So right here we have this bearish leg down, right? Come up, we get our short, when this bearish leg down, and in order for us to get a change in state of delivery, we have to get a bullish candle closure above a bearish candle, like like this. So we get our failure swing, and we get a CISD by closing above this bearish candle, push above it, and now we're starting to deliver higher, delivering with bullish structure now. So getting a failure swing, pairing it up with CISD is like putting the key in the ignition and starting it, right? Like it's starting that break of structure. It's not always going to be a break of structure, but it's kind of going to be the start of it. Like some people would have taken this trade right off the CISD with the failure swing and caught a crazy move. So your homework, if you guys are watching this and you want some help understanding market structure, understanding when we're going to reverse, I see a lot of people asking me, when are we going to reverse? How do we know? CISDs, failure swings, is the most important things you can really do. So I want you guys to get on the 15-minute time frame, 5-minute time frame, and just look at trends and look what happens when we get failure swings. When we inverse a higher time frame gap, what kind of happens to the trend? When you get a higher time frame CISD, what the market does. So I want you guys to look at that, start to get a better understanding of it, because understanding market structure is going to be one of the most important things you can do for your trading. And just simply only trading with the trend, only trading with the current market structure until we get a failure swing CISD inversion, anything that kind of flipped the trend. So definitely want you guys to look over that. If you have any questions about that, let me know. Yeah, that was episode 2. Gonna drop episode 3 later tonight about liquidity, how to find liquidity, which draw to trade towards, which draws are invalid, what's protected, stuff like that. So appreciate all you guys watching. Yeah, see you guys.